I get a lot of people who are looking at setting up IBCs, international business companies, trust, things like LLCs and entities like this to asset protect your assets. And I wanted to bring out some things that would save you a lot of time and money that I think a lot of people don't think about a lot, and then they'll set up these entities and then they go back and they really regret it. And I'm actually in the business for it, but I like to tell people stuff I don't want people to be looking at doing something and then go back and regret what they did. There's basically three types of people. One is someone who is living in the U.S., maybe sets up a IBC or offshore entity, and the person maybe gets a second passport, but he never really moves outside the U.S. The other type of person is someone that moves outside the U.S., and this can be also someone that, from another country, a high-tax country like Germany, Switzerland, or Austria, or some other country like that. But I'm gearing this a lot towards U.S. people because lawsuits are so bad in the U.S. If you pull up, you can do an internet search on this, but 98% of all the people, all the lawsuits that are filed in the world are filed in the U.S. 98%, that's how bad it is. And I've seen different statistics, but they're pretty close to 98%. That's how bad it is in the U.S. for lawsuits. So this, a lot of these lawsuits, are going to be occurring in the U.S. So, you have a person who maybe, the second person, like I mentioned to you before, who maybe gets an offshore corporation, gets a second passport, and then he moves overseas, but he never relinquishes his U.S. citizenship. That's the second guy. The third guy is the guy that goes the whole path. He leaves the U.S., relinquishes it, and he gets the second passport. And, he'll set up an offshore corporation. So this is basically how it works. I'm going to tell you the person, number one, who's getting the offshore corporation and living in the U.S., you're going to be more in need of it than the other two and three, which is someone that's left the U.S., has kept his U.S. status as a U.S. citizen, and then number three is someone that's relinquished his U.S. citizenship. Now, the reason I'm bringing this up is what you'll find out in a lot of cases, once you get outside the U.S., even if you're still a U.S. citizen and you're living outside the U.S., because most lawsuits occur because you're doing business in the U.S. and you're living there, you're going to find out that your need for these offshore entities drop dramatically. I mean, almost I wouldn't say to zero, but it's pretty low, okay? And you'll find out that they can be a real problem in a lot of instances, which I'm going to tell you about here in just a minute. So what you're doing is, if you're living in the U.S. and you decide that you want to, set these entities up, there is a big need for them in a lot of cases because there are so many lawsuits in the U.S. Now, that's assuming that you set up these entities before there is a lawsuit that's filed, because if you show that you're doing this to try to get around paying for judgment, even if the judgment has not occurred, fraudulent conveyance, which is basically trying to asset protect your money when you're going to get a lawsuit, that can be a real problem, because even if you lose the lawsuit and you have the assets in a trust, a judge can come back and say, hey, we're going to you need to bring those assets in, or you could say, well, I don't own them. And judges are not stupid. Even if you technically don't own the asset, a trust owns it, they can put a lot of pressure on you, and you can say, hey, the trustee they're not allowing the assets to come back in. Then basically the judge can throw you in prison for contempt of court. I mean, this is basically what it amounts to. Now, if you do this way ahead of time, you don't have that problem in most instances if you do it and you plan it ahead of time, okay? But let me tell you the problems that you run into when you hit number 2 and 3. And you're also going to run into it with number 1 also, and you're going to have to decide, is it worth dealing with it. Let me tell you some real problems you have with having entities that are set up, like a trust, IBC, foundation, LLC, anything like this, is once you put property in these entities, I've seen so many people who will put property in these entities, and then they just decided maybe, for some reason they don't want the entity. Maybe they were married before, they're not married anymore, or they just don't feel like they're in a liability situation, and they just don't want the entity anymore, or they left the country where they're living and they just don't see a need for it anymore. Well, the problem that you have is if you've put a lot of assets in these in the trust, let's say you got 20 properties or 10 properties or whatever, most countries will actually hit you with a hefty stamp duty or a capital gains tax, not selling the property, but just transferring it from the actual offshore entity to your name. Okay, St. Kitts is that way. They got a 10% stamp duty, and they view it as a sale, although it's a transfer. So you have to pay a 10% stamp duty. You got $1 million property, that's $100,000 you paid in a stamp duty tax to transfer that that's one property. That include all the other properties you got in the trust. You're going to have a transfer tax on every one of those when you transfer them out. Okay, I'll tell you another headache you run into is if you have now, what you'll find out is you didn't have this 10 and 15, 20 years ago. Okay, you got it now. So if you go and you start putting money in a lot of these places like Hong Kong, Singapore, Switzerland, and you put it in an offshore entity, and then you decide later you don't want that entity anymore for some reason, okay? The problem that you run into is they've got laws, they got money laundering laws, and what they do is they have these money laundering laws because they want to keep people from fraud, someone coming in and let's say getting a hold of your account number, your password and everything, and then trying to transfer your money out to another entity, okay, that you don't own. It's fraud, okay? So the way they control this is they make it where you can't transfer those assets that you have to another entity, even if you can show proof that you actually are indirectly a beneficiary, an owner of those assets as far as the shares of an offshore corporation, or if you have any sort of direct or indirect beneficiary to that, even if you can prove it, they won't transfer those assets over to you. Now I'm talking about brokerage companies, and a lot of banks are doing this now, okay? So in other words, what they're telling you would have to do, you would either have to sell the equities or transfer those equities, okay, to a bank, not a brokerage company, but a bank. And a lot of banks won't do it now, but there are some banks that will allow it. It's almost an entrapment. You literally have to either sell them or you have to transfer them out. In other words, sell them, you got the liquidity there, and then you wire it out in the different currencies, or you can transfer the equities out individually. It's very expensive too to do it because there are charges for each one of those equities to transfer them out, and then you got wire fees on the cash. You got conversion fees if you try to switch them into another currency, and it's very expensive. Okay, and then you would literally have to transfer those assets from the corporation that's in one brokerage company to the same corporation with a bank in another jurisdiction, or it could be, in fact, what we're finding out now is it would have to be an entirely different jurisdiction because the ones that have the laws on the brokerage companies are having the same laws on the banks. So the banks won't even take it. You have to find another jurisdiction to actually, and it'll have to be a bank. I'm not even finding brokerage companies that will do it. You'll have to transfer it out to that bank from your corporation or IBC, whatever, in that existing brokerage company that you got now to another bank in another jurisdiction, okay, and with the same corporation's name that you got, and then you have to do an internal transfer over to your name, okay, and then you'd have to, if you want to go back to that other brokerage company you were at, then you'd have to transfer all that stuff back out again, buy the securities again right after you've sold them, okay. And I'm going to tell you something, the expense is incredible, the amount that you can end up paying, not including if the stock market goes up. If you've sold all those equities, transferred them out, by the time you get them doing that total rotation back in again, you're looking at probably, you could lose $500,000. You could lose $10 million, depending on, unless you transfer the equities out yourself and from one equity to another without making the sale. But that's even expensive there. That can be real expensive, just the fees and stuff that you would end up paying on that. And just to get out of the entity, okay, just to get out of all this trouble you would have to do. And this is, and you might have a real good brokerage account that charges real good rates. The next one that you try to switch to could be charging you outrageous rates. But what you'll find out too is usually these banks that charge outrageous rates, they will usually take a business like that, because a lot of people will do business with it because their rates are so high. But you have no choice because you want to get out of that entity, and so you end up paying ridiculous rates trying to switch out, and then the bank probably would throw their hands up, being really pissed off because now you didn't do it to switch to their bank. You switched to them to switch back out to another, the same bank you were in. You understand the trouble and the hassle and the headaches that you run into? That's just the first part. The second part can be even worse. What we're finding out is now a lot of these offshore corporations are now coming in places like Belize, places like Seychelles. Seychelles does not require you to file a tax form right now, but you're going to have to turn in financial statements. You have to turn in all kinds of bank statements. If it's a brokerage statement, your financial statements. You're going to have other invoices, contracts, copies of contracts. They want to see all kinds of crap, man. It's incredible, the stuff before it was nothing. You just paid that annual IBC fee a year. That was it, man. You didn't hear it back for nothing. Belize is the same way. Now you're having to file an annual tax return. Okay, these are things, if you had it in your name, you wouldn't have that. Okay, remember this: if it's in a Belize offshore corporation, if it's in your name and you're in a jurisdiction that's charging high taxes, all you got to do is just take yourself and move, okay, to another place. Totally different when it's in a corporation. It can be very, very expensive and very time consuming, and trying to find a place that you can do it with the way you want to do it. It's a real pain in the butt. You didn't have this years ago. Now, because Belize and these other companies didn't have tax filing requirements, you didn't have any of that stuff. But now, because the OECD put all this pressure now, all these different countries, they've come out with this. If they don't come out with it, then they get put on these friggin' blacklist, and which basically says, we're blacklisting your country on all your corporations. You can't set bank accounts here in Europe. We're not going to have tourism coming to your country. We're going to, they could change the tax status, the tourism. I'm talking about withholding tax in that country. They can, the tax treaties they can change. They can come in and do all kinds of things dealing with tourism. They can say, hey, we got direct flights to your country. We're not having any more direct flights to your country. All tourism is going to be cut off from your country. You can understand why there's so much pressure financially with these different countries to come in and basically just get down on their knees to these countries. It's a real ordeal, and you're a lot more flexible. Like I said, getting back to what this whole thing's about, if you put it in your name. Okay. Now, if you're in places that have high liability instances like the USA, I mean, people sue you for stealing your peanut butter sandwich. I mean, it's just incredible the things that they will sue you for in the U.S. But they got contingency lawsuits. That's why it's so bad. You get, anybody can sue somebody and win the lottery if they win. Okay, and a lot of times people will throw in the towel and give in on the lawsuit, even if they know that they're innocent, because the fact is they're going to pay $50 to $100, maybe $300,000 in the lawsuit. Better give the guy $20,000 and get him off your back. And these are the types of things that you run into. You don't have that when you get outside the U.S. Everything is on non-contingency basis, which means that if you sue someone, you better have money to do it, because if you lose a lawsuit, you're going to have to pay your court costs and theirs too. So you don't have frivolous lawsuits. You don't have this win the lottery mental attitude, when you're living outside the U.S. And it's just a totally different atmosphere. So you're going to have to decide, but you need to think real good before you start putting entities in trust, IBCs, because I'm going to tell you something. It was bad 10 years ago on certain instances, but it's real bad now. Okay, if you think that you'll never change your mind, then go ahead and put in these entities. If you think there's a chance, why don't you think about it for a good while before you do it? And you could be making a mistake on that way too, because if someone sues you, the asset's not in the entity at the time that the lawsuit occurred. You're playing Russian roulette. Also, it's a hard choice, but you need to make the choice to decide: is this going to be a good, feasible option that I'm not going to look back and regret? Anyway, folks, if you want to learn more on this, go to our website, www.citizenshipquickly.com. Hit the top bar that says Apply with Us. Fill out the questions. Hit that bottom bar that says Send it to us. We deal with over 100 citizenship by investment, residency by investment countries all over the world. Folks, don't forget, hit that subscribe button right on your screen. You'll get new videos like this. Save you a lot of money in the future. Hit the subscribe button and the notification bell next to it. You get new videos every single day. And I would like to hear from you. If you got a question or comment, just put it below. And I look forward to talking to you in the next video. Take care.